On the morning of January 24, Tesla's shares fell as much as 10% to $858.83. This caused the prices of most companies that make electric cars to fall as well. A share of Rivian Automotive fell to a 52-week low of less than $60, and a share of Nikola Corporation fell 10% from its January 21st close price to $6.70 before going back up across the board. Shares of companies that make electric cars are going down. This is very scary for businesses. Should we worry about a drop in the price of Tesla stock? Could Elon Musk handle this wave? Let us learn everything in this video. Other automakers aren't making money and are still trying to break into the market, but Tesla has been in business for a long time and is already making money. During the epidemic, record deliveries and the Biden administration's decision to put electric vehicles at the top of its climate change plan sent the stock price through the roof. A lot of investors who wanted to get in on the action put money into Tesla stock, which helped the company go over the $1 trillion mark. But in 2022, the stock's direction has changed. Since the beginning of the year, Tesla's stock price has dropped by almost 24%, even though the company had record deliveries and analysts wrote glowing letters of approval. The car company still has to deal with the threat of a tech market sell-off, though. It is now in the recession zone for the Nasdaq and is also in the middle of a record sell-off. As a result, investors are lowering the amount of debt in their accounts and putting less money into risky investments. This includes stocks that are expected to make money in the future. Tesla is one example of this. The government has recently started to support the EV business, but it hasn't caught on enough yet to compete with gasoline-powered cars. In the first half of 2021, for example, only 7% of all cars sold around the world were electric. So investors may have been even less interested in Tesla after the Federal Reserve raised rates. This is because higher rates lower the value of future earnings that are discounted back to the present in model forecasts, according to Dan Ives of Wedbush Securities. The electric car market is under a lot of stress because it isn't profitable. There are problems getting chips, and there are other production problems. Off-market electric car companies are in the middle of a market storm right now, which is not good. The analyst went on to say that execution is key to rebuilding trust on the street one brick at a time. At the time of this video, Tesla's stock price is about $888.40, which is 6% less than when it opened. Nikola and Rivian's prices are 7.6% and 4.6% less, respectively. Should Tesla investors start to freak out? Long-term buyers may have seen a price drop like the one happening now in Tesla stock. The electric car company's stock has always been a risky investment, and the current price drop, while big, wasn't really a surprise. Analysts think that the car company will have a huge share of the future market for electric vehicles. Morgan Stanley, which has been a Tesla bull for a long time, recently put out a note saying that Tesla doesn't have any real rivals. The company said that as they watch Tesla's model rollout continue, they think that investors and car companies may need to rethink how they market electric vehicles in terms of volume per stock-keeping unit. Out of the 41 experts who follow the company, only 11 say the stock is a sell. The bullish theory is based on the fundamentals of the company. While other automakers were having a hard time dealing with the effects of the pandemic, Tesla opened factories, found ways to get around the chip shortage that affected the whole industry, and claimed record deliveries. Analysts think Tesla will have a good year when it posts its earnings later this year. If Tesla does poorly, then all the other companies that make electric cars will do poorly too. For instance, Clear is having a rough time at the moment in the market. The stock of Lucid Group is falling sharply. S&P Global Market Intelligence says that as of early March, the number of electric vehicles was down 15.5%. Since this video was made, Lucid shares have lost 41.5% of their value this year. This week's loss can be traced back to Lucid's negative outlook. When it came to electric vehicles, the fourth quarter earnings report from Lucid was one of the most anticipated. When it beat Tesla's range rating, the new company got Tesla's attention. It was about to report its first EV sales revenue since going public in the middle of 2021. Investors also wanted to know how quickly the company was increasing production and how many cars Lucid had shipped since it started doing so in October of last year. Lucid's report on the evening of February 28th was a total bore, and the company's stock dropped by more than 10% the next morning. Unlike what was expected, Lucid had failed in a few important ways. In the fourth quarter, they made $26.4 million, but that was a lot less than what Wall Street thought they would make. In 2021, only 125 of Lucid's first car, the AirDream Edition, were sold. The net loss more than tripled and went over $1 billion in the fourth quarter. Along with that, Lucid lowered its production prediction for 2022 from 20,000 units to between 12,000 and 14,000 units. On the bright side, Lucid has received over 25,000 reservations for all four types as of February 28th. If all of these reservations are confirmed, sales could reach more than $2.4 billion. Lucid's only plant in Arizona is also on track to grow. The company that makes electric cars has also said it will build a factory in Saudi Arabia this year. This is a big deal because it gives Saudi Arabia's partners who make electric vehicles peace of mind. The official wealth fund of that country, the Public Investment Fund, owns a lot of shares in Clear. There are signs that Russia's attack on Ukraine is hurting the car market right now. The stock prices of both Ford and General Motors are going down very quickly. Each is down 6.9% and the other 5%. Tesla, a company that makes electric cars, is also losing ground. Early in the day, Tesla stock went up more than 2 percent points. It has since lost all of those gains and is now down 0.8%. What is really going on here? Reuters says that General Motors is the first company in a long line to cut links with Russia because of the attack on Ukraine or because of the sanctions put in place by the West in response to the attack, or both. GM said in a statement, "Right now, our thoughts are with the people of Ukraine." They also said that the deaths were terrible and that they would not be sending any more cars or trucks to Russia until further notice. Volvo, Daimler, Mercedes-Benz, and Harley-Davidson have all stopped sending goods to Russia as well. This is what Reuters says about GM. The company only sends about 3,000 cars to Russia every year. Ford is more at risk because it has more factories in the country. This could be why its stock price dropped, and it hasn't spoken out against Russia or cut ties with it during this war. Tesla, on the other hand, might actually get some goodwill, even though shipments of its very expensive Model Y and Model X electric cars and SUVs to Russian oligarchs might go down. When the company said last week that it would build a plant in Ukraine, it won over fans in Ukraine and nearby Europe. Tesla is giving free supercharging to people who are fleeing the fighting in Ukraine. Also, Tesla will offer this service for free to anyone who owns both a Tesla and another electric car at the same time. When Ukraine asked Elon Musk's equally famous SpaceX company to send Starlink terminals to help the country's land-based infrastructure improve internet access, Musk's company replied quickly. "We think Musk will be repaid many times over in the form of goodwill for Tesla's brand and stock, no matter how much it costs him to give Ukraine free energy and Starlink terminals. We think that Ford has the most to lose from the situation in Ukraine. In the long run, Tesla will make up for its losses and even come out ahead." Investors are being hit hard by the triple whammy of geopolitical war with Russia and Ukraine, persistent inflation, and rising interest rates. People who spend on their own should remember that they can't control the market and the economy. There is an even bigger risk for institutional investors who are working with hundreds of billions of dollars. Tesla stocks should be able to turn things around and go up in value over the next few years. What do you think about the fall in Tesla stock? Do you concur with Ives? Leave a comment below.